Recording journal entries. Let's learn how to record journal entries for Tammy's business in May 2025. Every journal entry follows this rule. All debits should equals to all the credits. This is what you have learned in the previous lesson about the accounting equation. No exceptions. For beginners, we will go through 3 steps to record the journal entry. First one, we'll identify the accounts involved. Let's look at the first transaction on May 1st. Tammy invested 20,000 cash in her business. So let's look for the clues. Investment. And second one, cash. So we already learned in accounting principles that all transactions will affect at least 2 accounts. So the 2 accounts are first, capital, and the second one is cash. So capital is classified under owner's equity, as for cash is current asset. So now we need to know the normal entry. The normal entry for all equities, with some exception, but for capital, it's always credit. Cash, on the other hand, was always debit. And the third one, for us to identify the effect of recording this transaction to the account balance in the business, we need to understand that if we were to record this transaction, the capital account of the business will increase. And it goes the same with the cash. Now, let's apply the rule of recording the journal entries. It says here if the account balance will increase, we need to follow the normal entry. So this is what we're going to do. We'll just follow the normal entry because the effect is both increased. So credit for capital and debit for cash. So how do we record the journal entry? We will always start with the debit, the cash account, the amount of 20,000, and then credit capital, and the amount is 20,000. Done. That's the journal entry for May 1st. For May 2nd, hired a secretary receptionist at a salary of 2,000 per month. No journal entry is required for this transaction because Tammy has only hired the staff. No payment or financial transaction has occurred yet. So no record. We need to wait until the payment for the salary happened. Next, on 3rd of May, purchase 2,500 supplies on account from Ready Supplies. So when you see the word on account, it is not yet paid, so we have an account payable here. It's a liability. So we're going to record Ready Supplies. And the other account is supplies. In terms of classification, Ready Supply is account payable, means it's current liability, and supplies is actually a current asset. Until you consume the supplies, then only it will become supplies expense. So at the moment, it is current asset. So now, let's identify the normal entry for both of these accounts. The normal entry for current liabilities are always credit. As for supplies, which is asset, is always debit. Let's now try to understand the effect of this transaction if you were to record it. Your current liability will be higher, meaning you have obligation to pay back to Ready Supplies company in the future. Your supplies in the storeroom will also increase. So both increase, and we're going to apply the first rule by recording and following exactly the normal entry. So we just copy back credit and debit. And for us to record it, we will put there the date, May 3rd, and then debit. Always start with debit, supplies, account, amount of 2,500, and then credit the account payable. We need the name of that supplier so that we know whom to pay. We put a bracket AP to identify easily who are these supplier. Done. That's the journal entry for 3rd of May. Let's move on to the next. On 7th, paid. So that's one account. Office rent, that's another account. So we're going to record it. On 7th, the two accounts, cash and rent expense. The classification, cash is a current asset and this is expense. So the normal entry for all asset is always debit. Expense also will always debit. We need now to understand the effect if we were to record the transaction. Our cash account will be lower because we paid the rent expense. As for the rent expense, when you record this transaction, the expense account will increase. With that, we're going to apply the rule of recording and state that if it decreases, we are going to contra the normal entry. So contra of debit is credit. And then for the one that increased, we just follow the normal entry, which is debit. So you will always have one debit and one credit, and start recording the journal entry. For May 7, always start with debit. Debit rent expense, the amount of 900, and then credit cash because you paid for it, 900. Done. The next transaction is on the 11th. Complete a tax assignment and bill Karim Partners as a first account, 3,200 for services provided. There's no indication that it has been paid, so this is known as account receivable. So we identified already the two accounts. Account receivable. We need the name, Karim and Partners, which is account receivable. And the second account is service. Service is a revenue. So with that, we're going to check on the normal entry. Account receivable is a current asset. So your normal entry will be always debit. And then your revenue will always be credit. Let's check on the effect. If you were to record this transaction, Karim account receivable will increase because you can claim this money from Karim in the future, 3,200. Service revenue will also increase because you managed to complete the service. Now, knowing that both increases, so according to the rule, we can just follow the normal entry, debit and credit. And we will record it. Debit, Karim and Partners, account receivable, amount 3,200, and then credit service revenue, 3,200. Done. That's the transaction recording for 11. Let's move on to 12 transaction, where you have issued invoice for a management consulting engagement to a client CD company. And again, there's no indication that it has been paid, so this will be considered as account receivable. So the two accounts for 12 will be the name of the company for account receivable, and the other one is another service provided by the business when you issue the invoice. And let's check on the normal entry. The normal entry for account receivable will always be debit, service revenue will always be credit, and let's check on the effect. If you were to record this transaction, your account receivable will be increased, and it goes the same with service revenue. So it will be exactly the same as the previous transaction. We just follow the normal entry because both increases. Debit and credit. Let's move on to the next transaction. On 30th, received cash from CD company. Remember CD company? It refers to the 12th transaction. The date is 30th. The two accounts will be cash and CD company, which is an account receivable. Normal entry for assets. Both are assets, so it's both debit. As for the effect, your cash will increase because you receive the money. As for your CD company, they are because they paid already to your business, so the balance will be reduced. So we will follow the recording rule. Anything that will increase, we follow. But the one that reduces, we do the contra. So your journal entry for May 30th will be debit the cash and credit CD company. AR. Amount 1,200. So that means it's not full payment by that particular company. It's only a portion of the payment, so there will be still some balances not yet paid. Let's look at 31st transaction next. Paid secretary reception is 2,000 salary for the month. So remember we hired that secretary on 2nd and we did not record anything because there's no transaction yet. So now it's the time for us to record it. The two accounts will be cash because of the word paid, and the other one is a salary. This is an expense, and this is current asset. So the normal entry is both debit. As for the effect, for you to record this transaction, since you paid, so your cash will be lower. Salary expense, you now record it, so it will increase. And according to the rule, we're going to do the contra, means we're going to credit cash and follow exactly this normal entry because it increases the balance. And when we record the transaction, we always start with debits. So debit salary expense amount 2,000 and then credit cash 2,000. Done. So let's look at the last transaction there. Paid 60% of balance due ready supply company. So look at your entry, ready supplies, is account payable. You paid means there will be two accounts affected. One is cash because of the word paid, and the next one is ready supplies, which is account payable. So in terms of classification, this is current asset and this is current liability. So we are going to look at the normal entry for both of the accounts. All cash or all assets are always debit and current liability are always credit. So what are we going to do? Look at the effect now. If you were to record this transaction, your cash account will be lower because you paid. Ready supplies, that particular supplier, the balance in the account will also be decreased because you already paid. So we are going to contra both of the accounts because of the effect. So your journal entry will be the opposite of debit, credit, and debit. So how are you going to record the transaction? May 31st, debit cash, debit ready supplies, and credit cash. So we have done all the transaction recordings. Let's check on the next clip on how to post the accounts from this journal entry.